I'm about to show you an outlook on FTSE100, DAX40, and the S&P500 as recession fears bite. You can see on my chart here, the FTSE chart. It's on the weekly time frame, weekly chart. And I went in here, went short at this level, simply because when you can see this low here, we have a lower low than this low. So then it went back up to this former previous high. So I went in blindly selling the FTSE 100 index at this level due to the fact, as I were mentioning, that this low was lower than the previous low and went back to the previous high, a double top formation. And we can see that I have over 500 British pound in profit so far. And the resistance level, let me see, the larger demand level will be at level 6,900, because we can see a resistance level here in the past, which forms a support level in the future here, which is aligned with this one. So this level, this value zone is very important to take profits on this 6900 level. And when it comes to macroeconomics, the FTSE 100, as you see, as my chart, consolidates further below its near 6 months high. The FTSE 100 consolidates further below its near 6 month high at 7.618 as UK house price growth slows sharply. The Halifax House Prices Index in the United Kingdom rose by 4.7% year on year in November, the last since July 2020, compared to 8.2% in October. The average United Kingdom house price also declined by 2.3% versus October, the biggest drop since October 2008. Short term, a fall towards the 7.515 September peak on Tuesday's low at 7.503 is on the cards. A slip through which could engage the late November low at 7.42 as long as it underpins on a daily chart closing basis. The October to December uptrend remains intact though. Good resistance can now be found between the 7.58 August peak and Monday's high at 7.599 or 7.6. Key resistance remains to be seen among the 7.618 to 7.671 April to June, as well as November highs. When it comes to the German stock market, DAX40, formerly named DAX30, forms minor top. Let me shift over here to the German stock market index, DAX40. There we have it here. This is also the weekly chart. The DAX40 is seen giving back. Let me just get rid of this annoying box like this. Thank you for your patience. The DAX40 is seen giving back some of its recent strong October to November gains of over 23%, despite China losing its strict COVID-19 policy as market participants instead focus on US growth, with warnings from US banks about a recession next year leading to risk-off sentiment. With the DAX40 having slid through the October to December uptrend line at 14.52 earlier this week, the mid-November lows at 14.15 to 14.13 remain in focus, but may offer short-term support. Immediate resistance above the 1433 late November low comes in the mid-November high at 14.44. And let's have a look on S&P 500 that slips towards key support area on US recession fears. Let me shift to the S&P 500. We have it here. This is also the weekly chart, and you can see I have connected the tops here, the former previous high. So we can see that the price really respect and go down every time it's reached this diagonal line that I have written here. You can also see here the fourth time heading down. The S&P 500 slide through the 200-day simply moving averages, SMA, at 4.03 on increasing US recession fears for next year, and global risk-off sentiment has taken it back to its key short-term 3.918 to 3.90 support zone. It contains the 21st September, late October, and early November highs, which may hold on Wednesday on a daily chart closing basis. Should this not be the case, the 55-day SMA and early October high at 3.826 to 3.807 would be in sight. Resistance can be seen along the breached October to December uptrend line at 3.98 almost, and the minor psychological 4.0 mark. Since the Chicago Board Options exchanged, put-call ratio has been trading for much of November at elevated levels of up to 1.46, above the March year 2020 1.28 peak. The odds of a sharp decline into the end of the year being seen are relatively low, as the ratio tends to act as a contrary indicator, meaning that when a large amount of puts are being bought compared to calls, equity market generally tend not to fall much further. Instead, they have high probability of rallying in the near future. Furthermore, since 1950, there have been 3 times as many positive as negative Decembers for the Standard & Poor's 500. So, I just went through the FTSE100, the DAX40, and the S&P 500 drop on the recession fears. I hope you liked my analysis, and I would appreciate if you push the subscriber and the like button, so I can continue to give you this material for free. And I also wish you a lovely weekend. So have a good day. I will be back. Thank you.